Well. Welcome back to Krown's Crypto Cave. It's a beautiful and very relaxing Sunday morning over here from Chicago, Illinois, as we fly over beautiful downtown. Actually, in fact, the scenery today looking pretty damn consistent with what I'm looking at right outside, as it's a little bit overcast. But hey, we got plenty to talk about with Bitcoin. It is a Sunday, so we'll talk about more long-term price analysis. And also, there's been a lot of interest in actually talking about options over the past couple of days, so I guess I'll talk more about that. I didn't realize that so many people were actually interested in it, but hey, that's my favorite thing to talk about, really, when it comes to trading. So I'm happy to do a little bit more of a deep dive, as there was a lot of questions with how kind of I'm managing these positions going forwards here, which I'm happy to explain. So with that said, as always, I do want to wish you well, and do want to wish you the best, and the happiest of the happiest. As I got a good night's sleep last night, feeling good, feeling great, and let's beam it up into the live scene. I'm gonna initiate that teleportation. See you in there, and there she is. Starting off with a little bit of proof of trade right here. In fact, I'm actually in a trade right now on my Bybit, which I should actually be getting out. As yeah, I guess it's time to get out of that. Just pull it in. Jesus Christ, I don't want to be having major open positions, not like major open positions or anything like that, but just want to close that before I really get into it. But right here, starting off with the options chart. So a lot of people have been asking me, like, how does the premium on these options kind of relate to price action in general, and how are you kind of managing this, and why is your P&L change around so much? And the answer to this is because when I'm thinking of doing covered calls and covered puts, I'm always thinking of holding it till expiration, because it's usually done on the first front week. So that premium that I sell these options for, I kind of discount as already in the money. Especially these guys right here, the 10,000 strike calls. When I'm selling these for about $800, I consider that the same as selling at 10,800. It's just I don't really get marked to it until next week. In intra week, you'll notice that my P&L is gonna get probably pretty red here, especially if things go as I want. My P&L on these options is going to get very, very red here intra week, and it's not going to be until they actually expire on Friday where they come back into parity, right? Within about 24 to 48 hours is when the premium should really collapse on anything that's not like directly at the money, and even then the at the monies will decay quite rapidly as well. Apparently, especially to where they are right now, which is literally about like $600. So it'll probably be like around $100. Anyways, my point is that intra week you're going to get marked against what the against what the index is showing right here, which is basically just going to be marking these guys in the middle. So basically, intra week I'm going to be holding a loss on the on these calls. But the thing is that my long stock over here is going to account for that. As you can see right here, I'm long about 56 Bitcoins. Was 60 when I actually put this position on these December futures at 97.50ish region, because I did have to cover my options positions, as I had that on beforehand. But this is again why I love options, because there's always something to do. And remember, I was selling a shit ton of calls the last 3 weeks, and price action was going down until this week. And on this week, it actually reversed. So that's why I had to cover them by buying the underlying stock right here. So I'm making money on this. I'm making 5 Bitcoin on these guys, and then also probably like another odd Bitcoin on on my other positions right here, and then I paired that up against these short calls. And right now my P&L for these short calls is pretty much, it's pretty much nil. It's pretty much nothing, but that actually will go up from here, technically speaking, on expiration, assuming that we close somewhere between like $10,500 and $11,000. If it goes up too much, then it will still show a loss, and it'll be technically right that it's a loss, but I'll be making so much on the underlying spot position that it makes up for it, and it kind of locks in, so it gets capped at a certain point. But my point is that right now, or sorry, not right now, but a couple days ago, I was selling these 10,000 strike calls for about $800, and these 10,500 strike calls for $500, which, by the way, even with price action rallying about $300 to $400, have barely moved. Key point, by the way. And I was able to do that, a few days ago. So I'm basically just kind of sitting back and relaxing, because I'm more or less covered on all my position, except for about 10 contracts, which are right now out of the money. So that's just all premium. But what I'll do going forwards here, as we get closer and closer to the to expiration coming in on the 9th of August, is if we are still kind of living below 11,000, I'll just sell whatever's in the money against it and be able to lock in that way. And then I get to collect the premium on these guys as well. Maybe even sell a little bit more for premium, as there's a good amount right now, $350 at the $11,000 strike. And then if we go up and these go into the money, then I don't have to do anything. Just collect on that anyways. And it's the same thing as selling, 11,300 to me. right now. It's just you don't get to collect it until Friday on expiration. So I did want to quickly explain that, and you're gonna watch this P&L get very fucking red if things continue in the way that I want them to. If this P&L goes green, that's also not a bad thing, but I'll have to make a lot more distinctions with kind of how I'm handling these guys right here. I'll probably have to sell some more like deeper in the money call strikes, I'd imagine. But for right now, things are more or less doing what we want. So let's get into the price action right here, and starting off with the daily. As always, we've had a pretty damn good lead up above the yellow 20-month benchmark average, and I actually want to talk about this for a second as well. Some people did give me shit for basically covering my call position right on over here, which I thought that I was pretty damn transparent with talking about if these go against me, I'm going to cover them, but and I understand that the majority of people here are like they understand that, but for the people who don't, when you have to fucking cover yourself, you have to fucking cover yourself. But more importantly, I was saying the whole way through, I don't hold medium or long-term longs until we get back above the yellow 20-month expansion moving average, which we actually just did a couple days ago, confirmed on the 1st of August, which is very important, of course. But for me, because I had an because I had an options positions on, I needed to cover that quickly, and my kind of key for that was the breakout above 97.50, as we spoke about, a few days prior. So that's what I had to do. But still, I would actually still very much align with what I said prior. If I'm just waiting for price action to maintain above the yellow 20-month expansion moving average, look at this. It's a pretty damn good trade right here, from 10,150 all the way to almost 10,900, or a little bit above 10,900. That's almost an $800 trade right there. So I'd be pretty fucking happy with that. So even for the people giving me shit on that, it's like, hey, this trade works out. Or at least in my definition of trade working out, works out. And then also the options position, that's just a completely unrelated thing. And I just hope that I'm being transparent with the people who actually do make an effort to list it. I'd imagine that the people who are a little bit more critical of something like that, I don't really understand why you'd be critical. I don't really understand why, but those people are not my priority. My priority are the people who actually make an effort. The people who are the people who have been here for a while, and the people who really want to be a part of this community. Those are the kind of people who I really want to get keep here and cater to, and then perhaps even get more of. But that's a quality that I love speaking towards. Anyways, so yeah, on daily right here, all momentum oscillators still looking fine, still looking great. We still got daily Stokes very, 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 very much erect. In fact, more importantly, we actually will be reaching for the bullish control zone later tonight at 8 p.m. Eastern time, when we actually get the daily total close, which is not just going to be the daily, but also the weekly, 2-day, and 3-day. So we got a lot of higher time frames closing today. So today's going to be a big day. We also got daily RSI looking very constructive. This is exactly what you want to see here. Yes, I do think we probably get a pullback in this area, probably back down towards the exponential on the RSI here, but this is a very constructive behavior overall, and I like it. It's setting it up for a more medium to long-term play. But any sort of move back down here, I would be looking to get picked up, and again, a very, very good response, a very healthy response by the bulls overall, and really starting to solidify this whole price action over the last 6 weeks as constructive behavior, which again, long-term good. Anyways, looking at daily historical volatility percentile, it's telling us exactly what we should be seeing. So it's kind of like a secondary confirmation tool right here, basically saying that we're cooling off. We're actually below the moving average on this for the first time, in like months right here. We're just telling us exactly what we should be seeing here. This is one massive consolidation and should be viewed through the lens of likely a healthy bullish consolidation. Anyways, moving on to the 2-day, and I want to do all the higher time frames just because they are closing tonight. And yes, this one to confirm is yes, definitely closing down at 8 p.m. Eastern time. And here's the big thing: 2-day Stokes are gonna have a chance to cross the upside. And guess what? We have not seen the 2-day and daily and 12-hour Stokes align with each other from this area since literally 4th of February back on over here. And if I can remind myself, perhaps even you as well, when that happened, Bitcoin was at 3,500, getting ready for this next 6 months just straight to the fucking sky. And right now we have 2-day Stokes looking like they want to confirm to the upside. But guess what? Our daily up as well. Well, of course, we just looked at them. They're looking good. What about 12-hour? 12-hour up as well, although they're actually looking a little bit tired. But the last time that we saw all these guys coming up from the same area, which is kind of what we see right now, was, like I said, in February, right on over here. And you do see that 12-hour Stokes were right here, actually. Or sorry, they were right here. Daily Stokes were coming from the same side as well. If I can, Jesus Christ, man, now it's all now I lost my place. But it was right here during this whole this whole era, and then the 2-day, as you just saw, we're just having a fresh cross as well. So to me, that is a damn good signal from a more long-term time frame, because we're talking about major massive bases being put in on price action. In fact, when we look at the 2-day, and I hate to fucking say this, but the 2-day actually does have a falling wedge here. The volume signature is proper, the shape is proper, the response is proper. This is what you'd expect from it. The only thing that I would be kind of a little bit critical of is we want to see a spike in volume like relatively soon. And when I say relatively soon, I mean literally in the next 48 hours. We want to see a massive spike in volume as this actually gets further continuation upwards and onwards. Now, the measure move on this falling wedge would actually be pointed towards about 11,500. I do think that I'd want to be aware of resistance right around 11,200 first and foremost, and measured moves on wedges, in my experience, usually don't have a high hit rate, but this one does look pretty good here, to be fair. And of course, Bitcoin above all major moving averages on basically every time frame right now. On the higher time frames, never a bad thing. So yeah, looking at this, we do see 2-day Stokes looking like they want to cross the upside, and 2-day RSI getting back above this region as well. So both these things line up with each other. This is the kind of shit that I wait for. It's still going to take a little bit of time because we're talking about higher time frames here naturally, but it's really starting to shape up, for a big play relatively soon, which we're going to have to go into the lower time frames to really flush out. And don't worry, we're going to get into that. I promise. We're going to get into exactly what we spoke about at the beginning of this video. But this again, when was the last time we saw a signature like this? After the during the last big break to the upside, right on over here. We saw 2-day RSI taking out the exponential and working its way up. We saw 2-day Stokes working its way out from this critical zone here as well. That looks very, very healthy to me, and coming out of a nice formation like this, volume signature confirmation as well. I would say that this is this is good potential right here. Looking at 3-day is going to be closing tonight as well. As long as we close above the red 10 simple at 10,450, I do consider this a decent close. 3-day Stokes actually going to be looking like they want to turn as well. In fact, they likely will turn if we end here or higher by end of day when they close. And 3-day RSI, kind of like a subsidiary of the 2-day, but not really giving us as much actually. In fact, it's a 3-day jewel that's actually telling us a little bit as we do come into a little pocket of support right here. Typically, this area is a fib. It's lining up with a fib right here, so it likely will bounce the light blue oscillator, which is kind of a leading indicator for price action. And I'd like to see it test the pink once again, and that's going to be our next big test. If it can actually take out the pink to the upside and you have access to the jewel, that's going to be a big play as well. But for right now, that's like literally fucking months away. Speaking of months, we actually did just get a new monthly, but before we get into that, let's talk about the weekly. So weekly is very interesting right here. If we close the current weekly anywhere above the prior weekly's high at 10,690, which we're actually above by about $30 right now, but plenty of hours left in the day to go, that's going to be considered very, very good as well. It will make the red 10 moving average a massive base of support right around 10,000-ish region, give or take. Well, actually, it will be rising up on the next tick, which again, less than a day to go. So probably in like the low 10,000s, I'd imagine 10,001, 10,002 would kind of put it in the right space. But more importantly, if we actually take out the high of the last one, this is not an engulfing or anything like that on spot, but what we will have is we're going to be looking at GBDC over here, which actually has been leading price action for spot recently. It did make the first move to the downside a week and a half ago and made the first move to the upside earlier this week, and that's what we were looking at, and that's kind of what was making me bullish as well. And look at this, GBDC did close as a bullish engulfing dildo, a massive bullish engulfing dildo on the weekly right here. That is confirmed already, and it's going to be opening up back up for action tomorrow on Monday with the regular U.S. stock market, and this is going to really start to shape it up as a very, 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 very healthy consolidation. I do think that while I'm not necessarily convinced that we are ready to bust this one up just yet, I would suggest that we're going to be testing some resistances probably around the $15 and quarter mark, something like that. So I do like that. We also do see that what else can we look at here? Weekly RSI, just kind of hanging out in the bullish control zone. I do kind of see this as a consolidation. So I'm not necessarily convinced that it's like ready to roll onwards just yet. Same thing with weekly Stokes. Looks like it probably has a little bit more down here to go, but I do think that it's shaping up for it to really put in a massive base at this $10,000 level. What else do we have? Let's go over and check out CMEs, which are going to be open up later tonight at 6 p.m. Eastern time. And CMEs already confirmed the close as well. In fact, look at this. CMEs did close, or CMEs have not closed below the red 10 symbol. So we do have bifurcation between GBTC, spot, and CMEs. And that is due to this red 10 symbol moving average right here on all different ones. But CMEs, which actually put the most weight on, have never broken it on this whole run, while spot did, which was giving me a little bit of apprehensive nerves last week. It was the main thing that was holding me back from being bullish, but all the other bullish things kind of overshadowed it, and that's why I was taking those positions. Anyways, with regards to what we're seeing here, this would be, more or less healthy. It just looks like a nice consolidation, really fighting for the red 10 symbol, which is, indicative of very, 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 very strong momentous move. Usually you actually want to see things come down to your yellow 21 exponential moving average on the weekly. That's kind of like par for the course. And you can see, in the past, Bitcoin has a lovely history of playing off it. Okay. And we haven't tested it once this whole run. So that is, still a contingency. Of course, it does go without saying that the weekly jewel still does have this very much present, but doesn't mean that we need to test it like right now. But anytime that we get the weekly jewel with the light blue oscillator into the critical zone above the 80 marker and then flash red in the background and then get a negative slope on that same light blue oscillator, we actually do come down and test a 21 exponential moving average each and every time that has happened in Bitcoin's history, which as of right now on this date on August 4th, by the way, happy August, has been 10 times, and each and every 10 times it has come down and tested the 21 exponential moving average, usually pretty damn soon. So just kind of rolling through it all the way on over here, you can kind of just eyeball it out and know that that's true. And right now, are we doing the same sort of signature? We are. So this is still present, but it doesn't mean that we have to test it just yet. Although time would kind of be ticking down for that. It typically does happen within about 2 months, and we're about a month and a half now, I think. So that'd be still the one thing that kind of makes me think maybe we have a little bit of downside here. But keep in mind that the longer that Bitcoin just grinds it out going sideways, the more time that this 21 has to kind of crawl up here on the weekly. And that's going to be rising up pretty damn aggressively now. You can see it really took a major leap up with this current week of price action. So I'd imagine it probably actually lands itself in like the 85 to 80, maybe even 8,800 by closure tonight. So my point is that the longer that Bitcoin goes sideways here, the more that this gets pulled up, and then it actually technically wouldn't have to retrace as much to fulfill that prophecy once again as well. Anyway, speaking of prophecies, and this is what I really want to talk about today, and this is going to be judging the next big trade. And we're going to talk about the 4-hour death cross and the 4-hour golden cross. And guess what? Guess what's staring us in the face right now, baby? We got a golden cross coming in within the next 24 hours, I'd imagine. As long as price action does not literally dump down below 10,250 within the next 24 hours, maybe even within the next 8 hours, we will certainly see a golden cross on the 4-hour exponential moving averages right here, which I put a shit ton of weight on. When we got the death cross right on over here, that was kind of the time when Bitcoin lost to 21 on the daily, and it was not the best time to be looking for the upside trades in the more immediate sector. Of course, if you're actually an accumulator, then this area not so bad. But more importantly, looking at this price action right here, we are going to see the golden cross happen relatively soon, assuming that disaster doesn't strike within the next 8 hours, actually. And more importantly, historically speaking, anytime that we've gotten a golden cross in the overall context of a general upwards market, it has been pretty damn good buy for an actual momentous move. And of course, it's not financial advice. I'm not a financial advisor, but I can tell you exactly what I'm going to be doing, and I can share exactly what I'll be doing. And I'm going to be buying any sort of a test down around the 200 exponential moving average on the 4-hour dodo time frame, which is right here at about 10.3, a little bit under 10.3. But let's go back in history and kind of give you an idea of what this is operated off of. And I'm going to be presenting some new information today as well, actually in lieu of a conversation that's going on in the program Discord. But let's go back to the last general upwards market, which we'll have to go all the way back to like 2015, 2016 on the switch of the last one. 2018 need not apply, and we'll kind of look at the signatures from death cross to golden cross, which I've done a few times already, so I'm gonna fly through this a little bit faster, but there's some new information to reveal as well. Okay, so we see the actual turnaround right here. You got your first death cross on the 15th of January. It golden crosses on the 16th of February, so about a month from death cross to golden cross. But look at this. After you get the golden cross, we see just straight upwards action for the next, like 4 months, it looks like. Literally 100% gain. Literally 100% gain from almost 390 to like 780. Looking pretty damn good. Takes about 123 days from golden cross to next high, and literally a 2x. Then we get the next one right on over here, right? And Bitcoin gets a death cross on the 31st of July and gets the golden cross on the 6th of September. So another, about a month or a little bit over a month here. But we get the golden cross, and look, it tests the 200 exponential moving average a few times, but and even gives a little bit of drama right here. But ultimately, it does hold up above, and those are all good buys on that region. And look at this, from golden cross to next high, we have a 94.5% gain done over the course of 122 days. Pretty fucking good if you ask me. Then we get this next very, very short death cross right here, and a very and then a golden cross is about a week later from Jan 12th to Jan 20th. Literally less than a week later. And from golden cross to next high on price action, 55% done over the course of 49 days. And then we get the next one right in over here. Get the gold. I mean, this one actually lasts for about 2 weeks. So you can see from 18th of March all the way to 4th of April. And then from golden cross, again, all the tests down to the 21, or sorry, not the 21, but the 200 are pretty damn good. From golden cross to next high, 150% done over the course of 50 days. Or sorry, that's not even right. I apologize. That is not even right. It's actually a little bit more. From there to there, 175% done over the course of 68 days. Let me put in the high, do another little death cross action right here for about a week, it looks like. Yeah, about a week, about 10 days. And then that's the next big one. We get a test down here to the 200 exponential moving average, but that's the last test before the next high is being put in at, again, 170% or 107% gain from here done over the course of 42 days. Then we get our next one right on over here. Death cross to golden cross takes about a week and a half, 2 weeks. And then we get this, and this is really the last one before the March to 20,000. So you can imagine this one's going to be a little bit more of an outlier here, but happened on about $4,000, and then we go all the way to almost $20,000 for a 400% gain done over the course of 79 days. So my point is that usually these death crosses take on average about 2 weeks to kind of go from death cross to golden cross, which is pretty much exactly what we've seen right on over here from the 22nd of July to where we are right now on the 4th day of August. And then on top of that, you can talk about the percentage drawdowns, although they're not necessarily that they don't follow as much. Some very little, some actually not even taking you any lower, and some like 20% down. But I do believe that we've likely seen the low on this one already. The next test on the 200 exponential moving average to me is likely going to be a buy. And then more importantly, as you can see on average, more often than not, they were 2xing. Literally fucking 2xing, and in the later parts of the more parabolic portion of the move, we're talking about like literally fucking 4x there. I'm not suggesting that we're going to see a 4x here, but from if we get a golden cross here in the next day, and we get a 2x from the 200 exponential moving average from that portion, I mean that's going to be what? I mean that's literally going to put us at 20,000, a little bit above 20,000. I can't even make it go that high. Jesus Christ. But yeah, let's see what's 100% from this area right here. I mean, you already fucking know, right? You can do it in your head, but it'd actually put us a little bit above 20. It'd almost put us at 21,000. But yeah, you get the idea. So this is kind of a big deal to me right now as we get so close to actually confirming this. Usually you will see a little bit of volatility when these crosses do happen. So I would, I don't necessarily have like a full on, the lower time frames. I don't have a full on bias right now. I actually think that we might come down a little bit here to test the 200 exponential moving average. But I think that for me is going to be a buy. By the same token, do we come down here? Am I going to be wrong in that? Maybe I am going to be wrong in that. I am going to be wrong in that. Look at this. I can't be going against my own rules. We're still in this blue box territory right here. As long as we hold it, it's fine. Technically speaking, we have the white 200 simple moving average on the 4 hour actually governing price action. And guess what? The white 200 simple moving average on the 4 hour has actually been a pretty damn good indicator of where we are. When we lose it over here, bad. When we regain it right on over here, good. Same thing what kind of happened right here for just a smidgen. Regaining it, very good. Over here, once we got above it in February, that was literally the switch of the mark to the upside. And then once we got back down over it, once we got under it right on over here in 2018, that was the dooms drop from 6,000 to 3,000 essentially. So looking at this right here, maybe it's actually the 200 symbol that does hold. So I would say that as long as we hold this area, yep, I just see this as a consolidation, kind of similar to what we said yesterday. Really, if we were to break this area, which I'm not so confident if we break it or not. I actually don't think that we break it. actually don't. I'm going to go out on a limb here. I actually don't think that we break it. I think that it holds within this region, and then we get a next leg before like a real retracement, and then we'll test a 200 exponential probably. But again, it doesn't matter my thoughts on this. My thoughts are irrelevant. I don't trade my opinion. I trade technical analysis, and more importantly, on top of that, I'm not looking at this is not like the trade to begin with. Anyways, I'm waiting for the test on this guy, the purple 200 exponential moving average, which might it could take a week to happen. It could take a day, could take a couple weeks. I don't know, but I'm looking for that next trade along that area for a more long-term trade. And more importantly, with this price action right here, it offers up this, this little liquid zone right here offers up a very easy way to be trading. If we start closing 4-hour dildos above the top of this baby at 10.9, then yeah, I'm looking for the next level to be hit right around 11.150 to 11.200, this area right here. And then technically speaking, we do have that measured move from the falling wedge pointed actually much higher towards 11.5. But realistically, I don't think it would stop at 11.5. I think that we'd get caught in this sort of liquid zone here. Actually coming in from where was this? Let me get my rectangles out. My blue boxes of peace and prosperity, or death and destruction, depending upon which side you're on. But it was the drop off from 12th of July, so that would be kind of where I'm looking towards if this area gets broken. Short-term target would be 11.150, but more medium-term target would be right around here. It's just how long does it take to get up there? Nobody fucking knows, but I would be looking for that area to get hit over time, most likely, assuming that nothing else crazy goes on. But tentatively speaking, probably Bitcoin holds in this region right here in this blue box territory, consolidates a little bit more, spends some time going sideways, then breaks up, hits this 11.150, 11.200-ish region, then comes down, probably hits the 200 exponential moving average, and then makes a run for this next blue box over here. Now that's a whole bunch of crystal ball bullshit, and really and that's probably what people want to hear with technical analysis, but that's not real technical analysis, what I just did right there. Even though that is a legitimate path of price action that could very well happen, and actually do think that the probabilities of that happening are greater than 50%. That's not real trading. Like, how do you fucking trade off of an idea like that? My point is the way that I trade this is the same, whether my opinion is bearish or bullish. If we break to the downside of this guy right here at about 10.7 and actually close like an hourly 2-hour dildo below there, then I'll be targeting a move likely down here towards about 10.450, 10.500, just the next major movement average, the next major support, and move on from there. By the same token, if what I do think happens, I mean, the way that I'm going to trade it is going to be the same. I'm not buying right here. Well, you could buy right here and actually have a stop loss right below the low of this guy at 10.570. Actually not a bad trade. It's kind of a lot of risk for that, like $150, but it is potentially a long-term trade, kind of staring us in the face. So $150, not terrible risk really. It just depends on the person, but you could buy here, have a stop loss right below there, or just wait for the 200 simple on the 4-hour to get taken out to the downside, but that could open up your bunghole to some not so nice colored dildos over there. And to the upside, the way to trade is the same as well. Above 10.9, could buy a breakout above there. I don't really like buying breakouts. I'd actually much rather buy in support right here and then just eat the loss if it does turn against me. And well, if it turns up for you, then you got a great position. You have a natural stop right here then, instead of down here, right? And that's kind of the preferred way to trade for myself. But there's not a right or wrong answer for that. It's a right or wrong answer for you, and only you, as I look you in the eye. Anyways, we do see 4-hour momentum oscillators really starting to turn down here. We do see 4-hour Stokes really nosediving actually. So that would be a little bit of a counterpoint to what I'm saying. But what we actually want to see on 4-hour Stokes, if this is going to emerge for a trending move, is we want to see it come down to the edge of the bullish control zone, like somewhere down around here, around a 60, and get picked up. So let's see if the other lower time frames are kind of doing something similar to that. We do see 3-hour in a similar posturing, so they are moving together. That is what we want to see. That is healthy. 2-hour coming all the way down. So we want to see the 2-hour and the 1-hour kind of on the downside, looking to kind of spruce back up. If we can get those two aligned, then yes, we probably do see that next leg taken up first. And look at that. Look at that, baby. Look at that. So hourly and 2-hour agreeing with each other. So we probably do actually carry this upwards and onwards, and do some more sideways here on the lower time frames. Going to look like some upwards action, but really on the medium time frames, just sideways here, and probably does break to the upside. Would be what I'm thinking. But like I said, the way that I'm trading this is the same. It doesn't really matter what sort of crystal ball type bullshit I'm trying to do right now. That's more for just YouTube, and it looks cool, it looks sexy. I think that's what people want when they hear about technical analysis. But is that real technical analysis? Not really. It's real technical analysis, but it's not like real trading. Like there's a difference between being an analyst and a trader, and analysts have no skin in the game. They have no accountability, which makes them a little bit more slimy, right? Whereas a trader, that's the definition of having a skin in the game. Anyways, for myself, more important to be a trader. Okay, cool. So we spoke about all of that. Let's go over here to the 3-day. Once again, I do want to talk about this a little bit more. And I'm going to take everything off here except for the 50 exponential moving average. And, well, we can talk about a lot of things. We can talk about the 50 and the 21. Okay. All right. So, no, we won't talk about that. We'll talk about the 50 and the 200. All right. So, these two moving averages right here on the 3-day have actually been pretty good insight into what price action is doing. When they're cross the upside, we're generally in a long-term uptrend. When they're cross the downside, we're generally in a long-term downtrend. You do see the last cross the upside we had right on over here. Price action kind of falls into the cross and then gets crailed all the way upwards and onwards. Guess what? As well, the 50 exponential moving average never gets broken to the downside, especially never opens and closes below until basically the top's put in. So I would look at this as kind of like a governor for the ultimate low of like a major downside move. And it's currently coming in right around about 8,300, essentially congruent with the weekly 21 exponential moving average, as you'd imagine. So I do like that those two things line up, and historically speaking, this has been a pretty damn good indication of where we are in the overall phases of the market cycles. Losing it over here, bad; regaining it over here, good. And just the 50 exponential moving average kind of running it to the upside. You can see that Bitcoin loves to play off it, and to the downside, it likes to put in tops around that region as well. So any sort of move down here from the macro is, kind of where I'd be looking for very, 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 very long-term positions. It also means that if we lose that area, bad. And if we cross below the 200 simple, extra fucking bad. I mean, that's where things really get nasty for like a very long-term, multi-month downtrend. So I just want to show that longer term, all the people who are saying that Bitcoin's going to reverse from here, or who were saying that Bitcoin is going to reverse from here down to like 7,500 or even lower than that. I see a lot of people like calling for capitulation, which I just don't understand like at all. And again, this is coming from someone who is bear. I was probably one of the biggest bears during 2018. I was saying I was bearish on Bitcoin all the way through ever since this area right here, talking about 3,000 to 4,000, and that's and all that, and all those videos are still saved in time there. Not that sounds like I'm fucking bragging. It's not. I'm not doing that to brag. It's just trade with the fucking trend is my main point. Really, make life easy for yourself. And right now the trend is very much up. So the people who are calling for that, I just don't see it. I don't see that as even a likely scenario to happen from this region. This something like some black swan event would really have to happen for that. We can also put on the super gap, which this is what I've been looking at for a little bit of time as well. It's not my favorite indicator, but on the 3-day, it does get things, relatively well. And you do see that, when it turns green, it stays green for years at a time. When it turns red, it stays red for, usually about a year. But, another stint right here, then some more red right here for another year. But look at this, man. We just turned green, relatively recently in May, late May, really. It was really like early June. So it's only been like a couple months. And we're talking about usually years of price action. So I'd say that this is, more or less healthy. I do think that bears are certainly on the wrong side of price action here. Speaking of, let's actually take this guy off and put all these babies back on. And let's talk about the higher time frames for a second, because again, when in doubt, zoom it out, and when in doubt, pull it out, or better said. Let's go over here to the monthly. And, the monthly, again, is there any real reason to be bearish on this? My rule is that I'm generally bullish on anything that's above the monthly 21 exponential moving average, and generally bearish if it's below. And you can see that Bitcoin broke it right here, bad. Regain it right here, good. Like literally fucking immediately too. Don't always get like that. Usually it's like this, where it spends some time, but then it regains it right on over here, and very, very nice. Anyways, I just want to show that Bitcoin does have a history of playing off it. More importantly, last month, this is not a reversal dildo right here. This is not a doji dildo. This is a consolidation dildo. We neither take out the high or the low of the prior, and it's just kind of inside. It's just consolidation is what it is. So putting on the Trollender bands right here, you can see very obviously that this is just a bot target kind of taking profit off the top of the Trollender bands. But as soon as you're operating between the median band and the top band, and you're really closer to the top edge of this territory, that's very constructive, and that's actually quite bullish longer term. But this is a monthly, so it literally takes 3 months to a year to really play out, right? But looking at this, the momentum oscillator is kind of confirming this action. We do see monthly soaks getting above the 40 marker, the bearish control zone for the first time in over a year. That's exactly where, coming out of the last bear market, we actually really gained momentum from this region right here in December all the way to our highs in 20,000 a couple years later. Not only that, but monthly RSI regaining the exponential right here and maintaining above the exponential. I don't think that we're going to get the same signature that we saw right in over here. I think that we're going to actually consolidate this area as the exponential gets pulled up. And this is going to set it up for a little bit more of an aggressive move to the upside rather than a prolonged move to the upside, but that's okay. I like fucking moon boobs just as much as anyone else, but that is constructive behavior, and that is good. In the monthly jewel, given a decent buy signal a couple months ago on June, right on over here on the test down to 8,000, or sorry, 7,500. So not bad. I do like all those things. And again, to me, this is a bullish setup right here. There's no reason to be bearish as long as we're above, especially the monthly 21, also the monthly 20 right here. Both the yellow and the gray moving averages. That's a strong setup, and momentum oscillator is confirming that fact. We're looking at long-term price action right now, and this looks fucking good, man. Looking at the quarterly closed very close to the top of the 200 bands on the last closure in April, and we're working on this next stint right now, which is looking pretty good. I mean, when you close next to the top of the 200 bands like this, it's setting it up. That's what it's doing in my experience, setting it up. And look at this, quarterly Stokes, fresh cross up, rejection of the bearish control zone. Oh my God, quarterly RSI. Retaking the exponential, powerful RSI. Longer term, this is very good. Very fucking good. Let's speak a little bit more about long term. Let's go to the Bitcoin network momentum. I'm still awaiting some confirmations here. I do want to make sure that this is, this is still my last concern fundamentally with price action. So the Bitcoin network momentum is essentially looking into the value transmitted through the Bitcoin blockchain denominated in Bitcoin value plotted against Bitcoin's price. So that's what we're looking at right here, the brown oscillator and then the yellow line chart of price for Bitcoin. And you do see a very obvious, very obvious trend going on here. We see when the brown oscillator, the Bitcoin network momentum starts to get actual momentum, and we start to create an uptrend, then we actually put in real highs on price action. We do a parabolic blow off top. What happens after that? The higher highs and higher low strategy is kind of broken, and we put in this nice little base right here. So we break above the actual horizontal key point, which is above the prior highs on this last, on this last drive on the network momentum, which correlated with price action. Once we break above there, that's actually when the next cycle begins. Again, key point. That's when the next cycle begins. So you put in this nice horizontal right here, based off your top prior high right here, and then you continue the uptrend a little bit more for the next a couple of years it looks like, and then once we break back down below this same horizontal right here, that's when the high is put on this next market cycle right here. Then we downtrend. We get lower lows and lower highs for the next year and a half, it looks like. And then we put in our first higher low right here, put in our first higher high right here. And guess what? Guess where is that kind of at the same point? It's at the same point of breaking the last prior area right here, which sets us off into the next bull market, going on for actual momentum from basically the turnaround at $400 all the way to $20,000 a few years later. We do the same thing right here, put another horizontal uptrend for a little bit of time. Then we put in our highs, create a little bit of a downtrend, break below the horizontal. That puts in the highs. It's actually a little bit afterwards. But more importantly, I'm really not looking for the next major momentum to be gained with Bitcoin until we actually get back above this region right here. Not only that, but looking at the network momentum, we actually haven't even put in a higher low just yet. I mean, look at this. I really wanted to see this guy hook around last week. We didn't get that. We actually nosedive. So that is concerning here. But if we can actually just get this to kind of roll around and put in a higher low here and actually work its way towards this next area right here, that's when the actual party really does begin for Bitcoin. Historically speaking, that's when the real momentum is actually going in in the upwards direction. So we're seeing all this price action emerge over the past year and a half. And we haven't even seen a major fundamental driver get behind price action as well. So I just want to show that longer term, the potential here actually is pretty fucking massive. Okay, cool. Spoke about that. Let's go look at the expected moves chart. We do see that expected moves looking a little bit more sideways today to me. Overall sideways. But trying to gather my thoughts. Overall consolidation in the more immediate timeframes, just sideways right here. But this is healthy consolidation. It does have a bias to, there's no real bias in this more immediate price action. Yesterday, yes, there was an upwards bias. Right now, just kind of sideways, really. But you can see in order to break this next level, we will actually have to do some nice things, or maybe not so nice things. To the upside, we actually only just have to get back above 11,000. That's going to be breaking this whole consolidation right here, and likely does send us up actually to likely to the third standard deviation, as usually that's what happens after a long period of being caught within the first standard deviation. You get a big momentous move. That's what it's suggesting. This is a mean reverting indicator. Remember, so it will naturally expand. It will naturally explode at some point in time. That's how it's designed, and that would imply that the longer that we get constricted within this region right here, the more likely that we actually get spit up into the more crazy third standard deviation regions right here, which is literally less than 1% chance to happen, but it does happen, of course. And where is it coming in around? 11,500, exactly the measured move on the falling wedge that we spoke about earlier. Of course, not only that, just to get an idea of what the downside is going to take. If we go below 10,200, which is kind of my 10,200 is like my first major like warning area, and that's because that's right around the daily 21 exponential moving average. In fact, actually that's below it now. Holy shit, that's below it. So the daily 21 is coming up above that region now. Holy shit, wow. So Bitcoin really built up a nice base right here. My point is that I'm not bearish on anything that's above the yellow 21 on the daily. Like even on the short or medium time frames, and you can see that the expected moves chart, like that would even put us below the second standard deviation, and almost down towards the third standard deviation. So literally somewhere between a 5% and 1% chance to happen. Maybe we could say like 350. This would be a great number. But my point is that you can see that it'd really take a lot for Bitcoin to actually force itself back down below that critical region. So this is where the beautiful interplay between understanding extremely high level math with regards to historical volatility percentile, and then also understanding technical analysis as well, really go together and produce something massively great. So we can actually come up with probabilities with these sorts of things and really start to, have an actual bias based off of reality. And in this case, taking out the downside here would just take a lot of effort by the bears, and I don't think that we really have it. I think that this price action generally looks good, and the bias is certainly to the upside here on the medium and higher time frames. Doesn't mean that lower time frames can't have a little bit of volatility. I'm sure that they will, but higher time frames more or less look good. Is really the picture that I want to paint here. Just painting a little picture for myself. No, of course not. I want to be grounded in reality, of course, as well. But that's what the math is there for. Anyways, so spoke about that. What else do we have to say? Let's go over and check out the Bitcoin dominance chart. I'm curious if we actually did top out a little bit yesterday. I'm going to imagine that we probably did. Yes, we did. Oh man. Okay. Okay. I do believe that I'm going to be right on this one. This is a consolidation right here. We're not breaking out true new highs through this area right now. This is a very healthy consolidation, but I do think that it takes its time going sideways here. So I do think that alts are going to get a reprieve once again, just very, very slightly, and we're going to be operating between the 68% and the 66% region right here, as Bitcoin probably comes back down and tests the 21 here. So that's going to give alts a little bit of breathing room, maybe down to like 66.5%. But longer term, I'd still be massively bullish on this. Don't get me wrong. Longer term, weekly, this is a very, very strong consolidation here. Consolidating at a 200 exponential moving average like this and holding it here for weeks is very, very good. Monthly is incredibly taking fucking forever to load. It's incredibly bullish to me though. I would be looking for a test ultimately over the next few months to like the 72% region, which is going to spell a lot of hurts for alts. But in the meantime, in the shorter term timeframes, I think that we do come down here. So alts short term likely do find some lows and get to rally off their lows versus Satoshis. Longer term, I'd still be massively bullish on this, but this is likely to take months on end. So for right now, not too applicable. What else do we want to talk about? We want to talk about gold. Gold having a positive correlation with Bitcoin and looking bullish here. Very, very good close on the weekly for gold, and we'll just kind of compare these two with the correlation coefficient. Shout out to Bali for this one. Come on, baby, show it to me. This purple histogram in the bottom here showing the correlation between Bitcoin on Bitstamp and gold prices spot, and you can see that the correlation is actually increasing. So gold having a very, 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 very good closure, and actually do have many measure moves pointed, not many, but a couple of measure moves pointed up more north from here at 1462 would be first stop, and then next region actually a little bit higher at 1513 region. So I am bullish on gold, and if I'm going to be bullish on gold and they're positively correlated, then I'd have to be bullish on Bitcoin as well. So I actually do like that. And we've been speaking about this for a while as well, that lower timeframes on gold have been pretty brutal to actually trade. This fake out right here was fucking nasty, but this is why I always say when in doubt, pull it out. And looking at the higher time frames, was there any real reason to not be bullish here? No, of course not. In fact, the higher time frames look very good. The higher time frames look extremely bullish. I shouldn't say extremely bullish, but they look pretty fucking good. They look good enough for another leg higher. Lower time frames, they fake you out each and every day, and the people who move that market, they know where stops are. I don't even mean this as like a fucking conspiracy theory. No, they quite literally do know. They can actually map them out with good pinging and these fucking quantfers, man. They do have some pretty impressive tools. I'll tell you that. I don't know how it actually works, but like they can ping the server. If they ping the server enough times, they can usually figure out kind of where your stops are. But that's an incomplete thought. I don't really understand the process. anyways, this looking good, kind of lines up for Bitcoin, and this obviously opening up, I believe, later tonight in Forex land. So we'll be able to, watch this one likely have follow through. As far as alt goes, I guess we can look at the index, my index for alts, which is Cardano here. And like we said yesterday, it looks shitty right here, but I do think that it bounced back up, probably bounces back up towards maybe like 580, 590 region. It's gonna be the opposite of the Bitcoin dominance chart, and there's gonna be some that are that are more strong, some that are more weak, but this one pretty much is like straight par for the courses, just being your average, run of the mill coin chart that just most charts look in some variation of this. Some are a little bit stronger, some a little bit weaker. This one literally right in the middle. For all the people wondering why I pick on it all the time, it's just easy. It's just the easiest one to pick to kind of look at. Let's go look at the other top two shitcoins. Mr. Beaterall actually using the red 10 symbol as support here, but man, did we close above the 200x benchmark average yesterday? No, just a buck short. It looks like not even a buck short. No, 24 cents short. Wow, super close. Is it 24? No, 34 cents. 34 cents short. So we're gonna have another chance today. We do see we still see momentum oscillators to the upside, and more importantly, if Bitcoin's going to break to the upside here, you're likely going to see Mr. Beaterall break to the upside. So if Mr. Beaterall does break to the upside, which would be any sort of a closure above 222.5, I'd be looking at a measure move towards 243, 245. It looked good. It looked generally good. By the same token, if Bitcoin gets rejected, then we probably see Mr. Beaterall come back down to 209.5. And if that area breaks, then we got some problems down into the 180s once again. But I do think that it goes the upside here. It probably wants to follow Bitcoin most likely. Looking at weekly here, weekly's pretty bad, to be fair. Weekly's pretty fucking bad, but this one following more than anything. So I do think that if Bitcoin pulls through here, which I think it does, you're going to see Mr. Beaterall fall as well. And same thing for Mrs. Litecoin. Mrs. Litecoin no longer leading, and but kind of showing up a similar signature to Mr. Beaterall, a little bit stronger, certainly on the stronger side of the conversation, above the 200x benchmark average, and using it as support. We do have a nice little formation going on right here. We have not broken below this horizontal right here, so good. So far so good. And we just kind of redraw this. Hey, get on over here, you little fucker. We redraw this like this. It's fucking annoying, but that is the right way to be doing it. And any sort of a break above 97.5 bucks, and I'd be looking at a resolution of this formation all the way up here towards like 110ish region. And really, it's going to come down to the weekly close tonight at 8 p.m. Eastern Time. If the weekly closes above the yellow 21 at 94 bucks, which it's about 24 cents, sorry, not 24, but 14 cents away from right now, then I'd be generally looking for some upside over the next few weeks, back up to like 115 to 120 region. Actually, if we close below the 21, it's not a death sentence, but it does make this. We'd have to come back and reconsider if we should actually be bearish. If we should be bearish, then price target's going to be down around 78 to 75 bucks, and perhaps lower than that over time. 12-hour is kind of nasty here. We do have a death cross, to be fair. So it's not fucking rainbows and sunshines in this bitch right now. I think that does it for what I want to talk about. We can go back here to, did I say everything that I want to speak about on CMEs? CMEs did have kind of a nasty close on Friday, like if you look at the lower time frames, but that's a good benefit of the doubt. It would show support right around 10.3 if we do have some downside volatility. Anyways, going back into spot charts right here. I can kind of wrap it up like this. Golden Cross will be happening today as long as Bitcoin doesn't dump down 500 bucks in the next 8 hours or so, maybe even sooner than that. By the same token, if we actually do break the 200 simple right here to the downside, that's the only way that I even be looking for a little bit of downside here. And I don't be targeting the 200x benchmark average on the 4 hour. And in fact, I'd actually be happy to do that because, well, I'd be happy to buy that area really. But to me, this looks very constructive right here. It looks like we're going to try to hold this area. It looks like we're consolidating this area, just kind of flagging out, and probably do actually get a move higher before any sort of a real downside move. Testing supports once again. But like I said, longer term, my next big play is going to be on the 200x benchmark average on the 4 hour. And I'm basically a bullish. I'm basically bullishly biased as long as we're above the 200x benchmark average on the 4 hour and above the daily 21 on the or the daily 21. Really, if we break above this area right here, like I said, short-term targets can be about 11,150 to 11,200, and technically this guy is still very much available right here at 10.6 to 10.8 region, but that's probably a little bit more medium-term time frame minded. By the same token, if we do break to the downside, like I said, 200 exponential is where I'm looking at 10,250 to 10,300. Even if we broke it, bearish is not the right term for me. I would be looking for further downside down to about 9,900 here, where things could get a little more nasty. But even then, it's not till we break this guy down here, the same area that we were at last week. down around 9,400, where I can actually get bearish for a move into like the 8,000s and maybe even 7,000s. But that would be a massive change of behavior. I don't think that that's what we're doing right now. I think that this is extremely frustrating for, for the bears right here, talking about capitulation each and every fucking day and talking about alt season as well. Nope, I don't think that that's what we're seeing. I think that we're seeing continuation here. We're seeing a very healthy consolidation, getting ready for more. Going to take its time, going to frustrate some more people. We'll probably have some more tests to the downside and get all those bears excited once again. But I'm not seeing them eye to eye right here. In fact, Bitcoin looking pretty damn good. I mean, Jesus Christ, man. Nice little move. Very nice move. So yeah, I'm going to be holding my longs, and I'm still delta long. I'm still happy to be delta long as well. And like I said, long term, I'm bullish essentially as long as we're above 9,400. Even in the shorter term time frames, yeah, there'd be a few plays to the downside, but I'm not even looking really for that to happen right here. This looks good. Looks good, man. Powerful girthy green dildos going on right now. I mean, as I'm trying to end this video, shit, man. Maybe I take a trade here or not. No, I'm really, really hungry, so I actually want to go eat. But yeah, it does look like it wants to break to the upside here. Probably sometime in the next couple days, and then I'll be targeting this move right here. Anyways, that's going to do it for right now. As always, not financial advice. It's been a pleasure speaking with you on this not financial advice on this lovely little Sunday morning over here from Chicago, Illinois. I do want to wish you well, as always, and I'll be back on tomorrow with some more video and live stream analysis. See you there, and take care.